Hello guys, how are you all? Hope you are all fine. I'm also good over here. So today we are going to finish the chapter number one. We are on the finales of your chapter number one. There are some miscellaneous topic as I talked about in the earlier classes, and that we need to close off today. Okay, so without wasting any time, let's begin. Just confirm me if you are able to hear me, able to see me, and able to see the screen as well. Give me a thumbs up and I will start. Okay, that was real quick. Thank you all. Let's continue with the same pace which we were doing in the last class. So we have already learned about what are the events. Event is anything which has been occurring, which change the reorganization of the financial statement. So event is basically a transaction which change the reorganization of a financial statement of an accounting entity. And accounting event can be defined as any financial event that would impact the account balances. You have seen already any posting into the ledger, that is your changes in your accounts. Your balance would get changed. So this would result in your change in balance of your company's financial statement. And each time company uses or receive cash or adjust any entry or do an adjustment entry in its accounting records, an accounting event has been incurred. So basically, in nutshell, every journal entry has an accounting impact. That is what they are trying to say. Okay, so then we had different type of vouchers. So voucher, what do you mean by voucher? In Hindi, we can call Rasid. Okay, whenever we go to some shopping mall and they provide us a bill, or we can call it a receipt. So receipt is nothing but an invoice. Okay, but if I am the shop owner, I also keep several records. Okay, in Hindi, as I said, it called Rasid. So Rasid is of different types. If I get money, that is a different receipt voucher. If I pay money, that is a different voucher. If nothing is paid, nothing is received, but there is a transaction which is taking place, that is called non-cash or transfer voucher. And there are some supporting documents along with the vouchers. So that receipt is English in your voucher, because in English, if I call receipt, it is receipt or receipt. So receipt means when you have received some funds or received some goods, that is called receipt. So they have to remove the confusion. They have renamed it to voucher. What is a voucher? It is a primary document which is created when the transaction is taking place. If a customer is at my desk and asking for some goods, so I'm making a note of it. So that is a voucher. That is not a journal entry. Journal entry comes after the voucher. So which is the primary document if there is a question for MCQ, which is the primary document. So I would say the voucher is the primary document which is being prepared when the transaction is taking place, and journal entry is done when that voucher is entered into the system or into my books of accounts. Okay, moving on. So we have several books which we need to discuss today. That is the cash book, purchase book, sales book, return inward book, and return outward book. So cash book, everybody know what is cash. That is cash coming in and cash going out. So there are various columns of cash book that we are going to cover. Double column, triple column cash book. Then we have purchase books, we have sales book, we have return inward and return outward. So return inward is nothing but your sales return. And we have purchase return, that is return out. Okay, moving on. Let's jump to that topic directly. This all we have already covered. What is debit, what is credit, what is the accounting equation, accrual basis of accounting and cash basis of accounting. We have done several questions on it, which are marked over here. Capital and revenue transaction, that is also covered. Yes. Capital and revenue expenditure. capital and revenue receipts. Okay, here they have given you a list of accounting standards. Some of them will be used when we are doing the accounting standards in detail. For example, depreciation. So for depreciation, there is an accounting standard which suggests what method should be applied for depreciation. So those are the accounting standards which we need to study, but not much in detail at this level. Ahead it will come in a detailed level. And there are some AS as well as IND AS. IND AS is Indian Accounting Standards. We have changed the global accounting standards to the Indian version of it, that is called the IND AS. So those are given over here. You have accounting standard and their number, and IND AS and their number. Okay, you can have a look in this table. So now everybody is aware of this format, which is of the journal. We have some columns which we are talking about here. That is the date, particulars, voucher number if you want, then ledger folio number, debit amount and credit amount. That is the basic format of your journal entry. And we have done many journal entries based on this format. Now let's go to the journal and let's see the types of journal in it. So that is general journal as well as special journal. What do you mean by general journal? General journal covers all the transactions which are being taken place, all transactions. However, your special journal are for certain transactions only. For example, cash book records only the cash transactions. Purchase day book records only the goods purchased on credit records. Sales day book records are the goods sold on credit. Return inward are the sales returns. Return outward are the purchase return. Then we have bills receivable and bills payable. Okay, so general is the same thing which you have already done across. Now the topic for today is the special journal. Today our lecture will be a little bit longer. It will be of 2 hours. Okay, because the last lecture was missed. So I will cover 2 hours over here. Special journal. Let's go to this topic. Okay. Before going to special journal, let's go to the compound journal, which you have already done. So compound journal is nothing but a compound journal entry where either more than one account is debited or more than one account is credited. That means there are multiple effects of one entry. In this case, in the first entry, you can see what they have given. They have started a business with cash of 50,000, plant of 24,000, is stock of 4,000. So what shall be the journal entry? Debit what comes in. So cash is coming in 50,000. Plant is coming in 24,000. Stock is coming in 4,000. And total will be going to the capital because it is brought up by the owner. Credit the giver. Okay, so that is 78,000. That in this case, you can see there are 3 accounts which are being debited in a single transaction. So this I can say it is a compound entry. Is that clear to everyone? Okay. So this is the basically the journal book where all the transactions are recorded. Moving on to our subsidiary books. What do you mean by subsidiary? The journal books are the journal ones which records every transaction, but subsidiary books record selected transactions. Okay. Now let's go to the first type of subsidiary book. That is called cash book. That is called cash book. One second. So here, as you can see on your screen, that we have three types of cash book. We have three types of cash book: single column cash book, double column cash book, and triple column cash book. What does single column cash book says? Single column cash book says we have one amount column on each side. We have one amount column on each side, as you can see in the draft. So you have only one amount column. This is the debit amount, and here we have the credit amount. So whenever the goods, whenever the cash will come in, we will debit it, and whenever it will be going out, it will be credited. Okay, so this is the single column. The rest all columns are same: date, particulars, ledger folio, and here also date, particulars, and ledger folio. But amount column is only one. So in this cash book, whenever the cash is coming in, it is mentioned on the debit side, and all the cash payments are on the credit side. It is nothing but a cash account, and there is no need to prepare separate account in the ledger. If you are maintaining a cash book, okay, you are maintaining a cash book, you don't need to prepare the cash account, because your single column cash book is nothing but your cash account itself. Am I clear, everyone? So it is the very simple one. Let's do one example so that you are also confident about it. I know you already know this topic, but let's do an example so we will have a more clear understanding on this. So first, paid to Mr. X, who was a creditor, rupees 5,000. Opening balance of cash, rupees 60,000. Cash received from sale of goods, rupees 7,000. Electricity bill paid in cash, rupees 2,000. Postage expenses paid by check, rupees 1,000. And last, stationery expense paid by cash, rupees 3,000. And one more, let's take one more. Withdrew rupees 10,000 from bank. Okay, these are all the transactions which we need to record in your cash book. Now, with every attention to the details, you need to focus, because if you understood this, everything would be very, very simple to you. If you do not understood this, things will be tough. So basically cash account, whatever is our cash account, that is the same format for now. I will replace the name with cash book. Okay, I've just replaced the name with the cash book. In cash book, we will have the similar columns called your date, particulars, ledger folio, amount debit, again date, particulars, ledger folio, and amount credit. That is the standard format which we have for all our ledgers as well. Okay, so that is the debit side on your left and the credit side on your right. Going to the first transaction, they have given us paid to Mr. X creditor rupees 5,000. So whenever cash will go out, I will do the credit. So by Mr. X account, 5,000 rupees. They have not given date, so I will keep as dash. We have paid 5,000. The opening balance of cash was 60,000. So here, whenever the cash is there, to balance brought down. Why it is brought down? Because it is the opening balance. That is why I'm writing on the debit side. That is 60,000. That is my first general entry. Okay. Then cash received from sale of goods rupees 7,000. So we have sold some goods and we have received 7,000. So it will come on the debit side because the cash will be received and it is received by sales. So we have debited the sales account on the cash book. On the debit side, we have mentioned the sales account. Okay. If you have any doubt at any point of time, please raise your questions. Okay. Then we will clear it out then and there. Fourth, electricity bill paid in cash rupees 2,000. So payment is going out. When payment goes out, we credit by electricity expenses account 2,000 rupees. Then postage expenses paid by check. We have made a payment by check. Will it come in the cash book? So you have to see one thing, whether it is a single column cash book, whether it is a single column cash book. And if the answer is yes, then no bank transaction will come. But if it is not a single column cash book, you have to check that whether we have a bank column in it, whether bank included. If the answer to that is yes, so we will include that. We are going to learn how we are going to include that, but let's focus on the first thing first. That is, this is a single column cash book, so no bank account transaction will come. So here we have paid, no, we have paid the postage expenses by check. So these transactions will not be recorded in my cash book. Moving on to the next one, stationery expenses paid by cash rupees 3,000. So expenses by stationery expenses account 3,000. And at last, withdrew 10,000 from bank. So if I withdraw any money from the bank, so I will get the cash because if I go to ATM and I withdraw the money, so cash will come in. Cash will come in. My bank balance will go down, but cash will be coming in. So if cash is coming in because of the bank withdrawal, so it will be to bank account rupees 10,000. So if you do the total on the both the sides, on the debit side, the total is coming to be, I think 77,000. Check that. Everyone, give me the total. What is the balancing figure which I am getting? Here it is 10,000. So balance will come over here. By balance, carry down. What will be the cash remaining after all these transactions? So that would be 77,000 minus 10,000. That would be 67,000. That is the balancing figure. Please check that the calculations are correct. Okay, so this is the very basic format of the cash book where only single column is appearing and single column represents only the cash transactions, only and only your cash transactions. Sir, then what does the double column and the triple column cash books include? Let's go to that now. Let's go to the double column cash book. So double column cash book is nothing but your cash book plus, that is with discount columns, with the discount columns, and has two amount column, one for the cash and another for the discount on the each side. All the cash receipts and the cash discount allowed are recorded on the debit side. Okay, and the all cash payments and discount received are recorded on the credit side. So now what will be the format of this? This is the double column where you can see date particular ledger folio, that is same. Here also date particular ledger folio, that is the same. But on the debit side, you can see cash. This you will record only the cash transaction, and here you will record the discount allowed. Then you will have on the credit side cash and discount received on the credit side. Sir, why we are taking the discount allowed on the debit side and discount received on the credit side? Dear, expenses should be debited. So that is the reason discount allowed is an expense and it will be on the debit side, and discount received is an income that will be on the credit side. Debit all loss and expenses, credit all gains and income. So that is the rule which is applied over here. We have given so much of your time on creating your basics. So that basic will result in your classes ahead. That will be a very easy process ahead because of that basis. Okay. We always do very much of efforts in our studying, but results come later on. So that is the results we were waiting in your initial period of classes. Now we need to just understand the things and the concepts will already be covered. Okay, so now if I give you one more example on cash book. Now this is double column. In the double column, we have date, we have particulars. I am not including the ledger folio because you know that ledger folio will come. So just ignore that as of now. Then we have cash. Then we have discount allowed. Moving on, that is date, particulars, cash, and discount received. Okay, so these are all the columns of your double column cash book. Now let's do one example. First, opening balance of cash rupees 10,000. Second, Mr. X paid rupees 5,000 in full settlement of his dues of rupees 5,200. Third, Mr. Y was paid rupees 3,000 in full settlement of his dues of rupees 3,100. Fourth, paid postage expense in cash rupees 500, received 10,000 from sale of goods, and last, sold goods to Mr. Ram rupees 20,000. Sold goods to Mr. Ram rupees 20,000. So let's do every entry one by one. First journal entry, the opening balance of cash. So the opening balance will be indicated as to balance brought down, that is rupees 10,000. Nothing in your discount column. Going to the second entry, Mr. X paid rupees 5,000 in full settlement of his dues of rupees 5,200. That means actually Mr. X has to pay 5,200, but he has paid only 5,000 in his full settlement. That means there is a discount of rupees 200 in this case. There is a discount of rupees 200 in this case. So when we have received the money, I will debit the Mr. X account. What money I have received in cash? That is 5,000 rupees. How much is the discount given? So discount allowed is 200. That we will write down on the discount allowed column of your cash book. Okay, I think the concept is clear. If not, everyone just let me know. Try this question yourself. Okay, try this question yourself and tell me what are the figures after doing all the transactions. Give me in the chat box. Then we have Mr. Y was paid. That means we have paid Mr. Y rupees 3,000 in full settlement of his dues of 3,100. So if we have paid Mr. Y, so it would be by Mr. Y's account. How much we have paid? We have paid 3,000 in the cash. How much discount we have received? Because the money due was 3,100, we have paid only 3,000. So the discount received is rupees 100. That is the discount received. Moving on. Paid postage expenses in cash rupees 500. So that is the simple journal entry. By postage expenses account, 500 is paid in cash. There is no discount, so dash, nothing on that side. Then we have received 10,000 from sale of goods. So if we have received, it will be on the debit side. It will be to sales account 10,000 rupees. Nothing on the discount allowed because no information is given on that. Last transactions. Sold good to Mr. Ram rupees 20,000. So whether this will come in my cash book, answer is no, because nowhere they have mentioned that sold goods to Ram for cash. So this, when they have mentioned the name of the person, it means it is sold on credit. Okay, so this will not form the part of your cash book. So if you have included that, the cash balance would not tally. That is not the correct answer. So now what we have to do, we have to calculate the balancing amount. So on the debit side, if you can see, there would be 25,000 in total on your cash column. And on the credit side, there is 3,500 on the cash column. So what would be the balancing amount? It would be 21,500. Okay, so this would total your debit side. So by balance carried down, that is the balancing figure. So that is the cash balance. It will go to the balance sheet. This will go to the balance sheet. Okay, because that is the cash balance which is left after doing all the transactions. But what about the discount allowed and discount received? On the debit side, you can see we have 200 rupees of discount that is allowed, 200 rupees of discount that is allowed, and we have received a discount of 100. So there is a balance of 100. Where this balance will go? This balance will go to your P&L account as an expense. Why it will go as an expense? Because I have given a discount of 200 and received a discount of just 100 rupees. So net effect to my P&L would be 100 rupees of expense as a discount. But there is another approach also. Another approach also that if you have allowed the discount of 200, you can debit your P&L account by discount allowed rupees 200 and credit your P&L by discount received rupees 100. Or you can directly write P&L account discount allowed rupees 100. Either way is fine. Either way is fine. This is called the net method. Sorry, this is called the gross method. Gross method where you write the discount allowed and the discount received. And this is called the net method where you net off the discount allowed and discount received. So here we have given a discount of 200 and taken a discount of 100. So net effect is 100 on my P&L amount column. So that is how you can do this. That was about your double column cash book. Now, the last and the most important column, triple column. In the triple column, there will be the cash account, there will be the discount allowed account, one more account will be added, that is the bank account. Bank account will be included. In the credit side also, cash account, bank account, and discount received account. So that is the triple column cash book. Whenever the cash will come in, you will debit the cash account or bank account, or whenever the discount is allowed, you will debit the discount allowed account. Whenever the cash will go out or out of the bank as well, you will credit the cash account and bank account. And if you receive the discount, you will credit the discount received account. So that is the basically three accounts in one column. Okay, now let's go to one of the example and just do see. Here we have one illustration. January 1, we have cash balance of 3,800 and a bank balance of 27,500. So that is the opening balance. I will write it as on the debit side, two balance brought down. So that is the opening balance 3,800 and 27,500. 3,800 is cash, bank is 27,800. Okay, the first transaction is done. Second, wages paid in cash rupees 1,500. When cash will go out, we will credit. So on the credit, wages paid 1,500 in the cash column only. Okay, because it is paid in cash. Third, received check of 19,800 from KBK Enterprises after allowing a discount of rupees 200. So how much amount we have received? 19,800. By what mode? In check. So bank account will be debited in this case, and discount allowed account will be debited by 200. So it is 19,800 and 200, that is from Mr. KBK account. Okay, that is the third transaction which we have done. Going to the fourth, paid to consultancy charges by check. By check, that means bank, 7,500. So on the credit side, we have made a payment, consultancy fees 7,500. I have mentioned on the bank column. It is very, very simple. I think some of the students in this session might be thinking that why you are teaching us all these, because there could be some questions, the multiple choice questions based on this concept. So you need to be aware of the format and the entries which we are doing right now. Okay, that is the reason we are doing it. Otherwise, it is very, very simple. Now, it is an important one. This type of transaction is called contra entry. Why it is called contra entry? Because in one cash book only, you have to do double entry on the debit side also, on the credit side also. Sir, how we will do on the debit side and credit side? See, cash of rupees 2,500 withdrawn from bank, withdrawn from bank. That means your bank balance will go down by 2,500 and your cash balance will go up by 2,500. So if the bank balance needs to go down, it will be credited, and the cash balance needs to go up, it will be debited. So it will have double effect on these transactions. So when your cash will go up, I will write on the cash column, that is cash withdrawn 2,500, and my dear, when the cash has been received, the bank account will be reduced, and due to that I will write it on the credit side, that is the cash withdrawn 2,500. That is the double entry. On the debit side, we have mentioned on the cash column because the cash is received. On the credit side, we have mentioned on the bank column because the payment is gone out from the bank. I hope that is clear to all of you. Then we have received a check of rupees 4,500 in full settlement of the account of Mr. X at a discount of 10,000, deposited the same into the bank. So we have received a check of 4,500 and that is after the discount of 10%. So what would be the discount? The original amount would be 5,000 and 10% is the discount. So they have paid me 4,500. So how did you calculated that? What is the logic behind that? See, my dear, we have received a cash. How much? We have received a check of how much? 4,500. And that is after allowing a discount of 10%. Can I say, that this 4,500 is equivalent to 90% because 10% is the discount? Yes or no? Answer is yes. So if I divide the 4,500 by 90%, so 90 divided by 100 will come on the upside. So 4,000 divided by 90 and multiply by 100 will give you 5,000 rupees. Sir, what if it was 80%? So in place of 90, I will write 80. Sir, what if it was 70%? So in place of 80, I will write 70. Okay, that way you can do this calculation. That is very, very simple. I think in mathematics, this has been already covered, but just to reiterate, I need to explain you. So we can see that is discount of 500 and we have received a check of 4,500. So bank account will be debited by 4,500 and the discount allowed will be debited by 500 rupees. At last, X check returned and dishonored by the bank. So here we have received a check of 4,500, but now it has been dishonored by the bank. So what I will do, I will reverse that entry. The bank account will be credited and X account will be debited by 4,500 and the discount also. Why discount? Because earlier I have given the discount on the basis of the payment, but now if the check is dishonored, so I will not just take 4,500 with him. I will take again 5,000 back from. That is how it works. Okay. Now, if you can see the closing balance they have mentioned, or for cash and bank account only, there is no closing balance on this discount allowed, because this will go to what? This will go to the P&L account. I think they have mentioned it in the note as well. Please note that the balance of discount column is not taken, as these are posted directly to the respective ledger account separately. The balance of the cash and bank column are posted into the cash and bank accounts periodically. The posting into the ledger is explained later in this chapter. That we have already done the posting of your cash account, bank account, etc., etc. So that was all about your cash book, single column, double column, and triple column. Any doubt, anyone? Come on, everyone, reply so that I can know that you are able to understand this, or it is going just above your head. One doubt I have received, sir, why we debit Mr. Y? He paid so amount and will be received. Then why debit? But I just going back to that. I think you are talking about the previous example. Yes, you're talking about this one. So in this case, Mr. Y was paid rupees 3,000. That means we have paid Mr. Y. Okay, we have paid Mr. Y, so cash will go out on that case. So cash account will be credited and Y account will be debited. So who was Y basically? He was my creditor, my dear. And if we pay a creditor, we need to debit that. So his balance will get lower. So that is why in this case, what we have done, we have debited the Y's account and credited the cash account. Okay, I think that was your question. All done, beta? Any other doubt? Or should I move ahead? Everyone. See, there can be two things. Either you are understanding everything or you are not understanding anything. So if you are understanding everything, that is very good. If you're not understanding, just let me know. I will have some other methods to explain you. No, sir. All clear, sir. Wow, fantastic. Lovely. Moving on to the next topic then. That is called purchase day book. What is purchase day book? Whenever we purchase any goods, okay, whenever we purchase any goods, so we are maintaining one book. For example, I am a businessman and I purchase from many suppliers. I purchase from many suppliers. So what I am recording, for example, it is 1st of April 2023. I have purchased from Mr. X 1000, but I have not paid him. In bracket, I am writing not paid. Then 30th of April 23, I purchased from Mr. Y 5,000, not paid. Then on 1st of May 23, I purchased from Mr. Z 10,000, not paid. Obviously, when I am writing this not paid, not paid, not paid, what I am doing, I am only writing the credit transactions, because I have not paid right now, but in future, I need to pay them. And someday if Mr. X comes and says that give me my 2000 rupees back. Give me my 2000 rupees back. I have sold you goods for 2000. So I will show him that, see my purchase book. I have only 1000 goods received from you, not 2000. So I will only pay you 1000 rupees. Okay. So to keep a note of all these transactions which are on credit, we prepare the purchase day book. So what in purchase day book we mention the date, we write the name of supplier and details of the goods purchased. We write the invoice number if there is any invoice which has been received from the supplier, ledger folio number, amount and remarks. Okay, whether it is paid or unpaid, or it may be the case that out of this 1000 rupees 200 paid as advance. So now by this I can understand that I only need to pay now 800 rupees. I need to pay only 800 rupees. So this is a simple book which tells all the credit transactions and all the details of this. So that is very, very basic thing. If you can see one example over here, bought 20 tables at 500 rupees per table from Majestic Appliances on credit at the rate 12% rate discount as per the invoice number 22334 on 2nd March. Okay, we have got 20 table. How much at 500 rupees per table? And there is a 12% trade discount on it. So if I do 12% of 500, that would be rupees 60. How much is the cost of one table? It is rupees 440. So I got 20 tables at the rate rupees 440. I have an invoice of 22334, which is on 2nd of March. So see, 2nd of March, Majestic Appliances, 20 tables at the rate 500, 12% 12 trade discount. So that would be with invoice number 22334. So if you multiply 20 tables into 440, it will come as 8,800. That is the entry done for my 2nd March. Let's do another example. Purchase 3 dozen chairs of rupees 250 from Metro Chair as per invoice number 1112 on 4th of March. 3 dozen means 36. Okay, 36 chair for 250. So that is the total amount of 9,000. Metro Chair 3 dozen chair purchased at the rate 250 rupees per share. Invoice number 1112 on 4th of March. That is how it will be done. Then second-hand furniture bought from Modern Furniture on credit as per invoice number 375 for rupees 1200 on 7th of March. So Modern Furniture 7th March 375 invoice number 1200, and this is the total which needs to be paid. Okay, please note that all the transactions will not be entered into purchase book as it is not purchased on credit. They are saying that every transactions which are basically on your cash transaction, that will not be entered, and which are purchased on credit, that will be mentioned in your purchase day book. This will be mentioned in your purchase day book. Okay, so where will those go? It will go to the cash book because it is done in the cash. Similar to the purchase of machinery, it will not form part of purchase book. It will be entered into the journal proper because this is not the stock. If you can see the 4th and 5th transactions, purchase 7 rack from Mayur Furniture 4,900 for in cash. It is paid in cash, so no entry in the purchase day book. And at last, if you have purchased any asset, that is machinery, it is not your goods. It is not your goods. So it will also not come in your purchase day book, whether or not it is purchased on credit or likewise. Okay, so that was about purchase day book. Same concept of all sales done on credit will be mentioned in the sales day book. So if you see the column, date, particulars, invoice reference, ledger folio, amount and remarks. So that is the format for this. It is exactly the same. So I am directly jumping on the transaction. So on 1st of July, sold Tip Top Clothing rupees 50 suits of 2020, 2200 each on 2 months credit on invoice number 2. So I mentioned the date, Tip Top Clothing 50 suits 2200, invoice number is 2 and the amount is 1,10,000. Next, sold to New India Woolen, 100 sweaters at the rate 250 each, total amount 25,000 on invoice number 25 and 11th of July. So that is how very simple it is. I know this is quite a procedural thing, but obviously you need to understand the concept behind it. That's why we are doing it. Then on 13th July, received an order from Modern Clothing. We have received an order for 100 trousers at 500. We have received an order. We had not sold the goods. So that is why this will not be recorded. This is not sold yet. We have just received an order right now. So when this will be sold, we will book it. Then sold 50 sarees to Lankad Brothers of rupees 750 each. So 50 sarees, 750 each, 37,500. That is no invoice number is given, so dash. Then sold t-shirt at exhibition hall for cash 7,500. This will not be recorded because it is for cash. If it was for credit, we will record this. Otherwise, no need to entry into the your sales daybook. Is it clear, everyone? Come on, speak up. Is it clear? Okay, my dear. Let's move on to the return inward. So what do you mean by return inward? That is the sales return. So nothing new. Date, particulars, outward invoice, ledger folio, details, totals, and remarks. So if you see the format, it is same for return outward also. Date, particulars, debit note, ledger folio, details, totals, and remarks. Okay. So that is very simple thing. Return outward is nothing but your purchase return, and return inward was your sales return. So it is the same like the purchase and sales day book. And we have the bills receivable and bills payable. So what do you mean by bills receivable and bills payable? That is a separate chapter, obviously, but yes, I will give you a brief on this. See, my dear, I am Mr. A. I am Mr. A. I have a goods worth rupees 50,000. I have a goods worth rupees 50,000. Mr. B wants to purchase these goods. Mr. B wants to purchase these goods. Now, I say to Mr. B, give me money, give me 50,000 rupees. He said that I do not have cash right now. I have no money. So whether I do not know Mr. B, I do not know Mr. B. So whether can I trust him? Answer is no, I cannot trust him. But if Mr. B says that I will write a affidavit, sign it before the court, in front of a judge, that I guarantee you I will pay after 2 months rupees 50,000. So now I will be little satisfied because it is a legal document. It is what? It is a legal document. And on the basis of this document, I will receive money from Mr. B. So this legal document is nothing but that is bills receivable for me. It is a bills receivable for me. Okay. But this document for Mr. B, it is nothing but it is a bills payable. It is nothing but a bills payable. So if I have a bills receivable, this will give me money. So this is an asset. If I have a bills payable, this will result the cash outflow in future. I have to pay this. So this is a liability. So bills receivable is an asset, bills payable is a liability. That is the basic concept behind the bills receivable and payable. Okay. So if you have a bills receivable, number of bills, date of receipt, from whom we have received, name of the receiver, name of the drawer, name of the acceptor, date bill, due date, ledger folio, amount of bill, how disposed of. There are many columns which they have mentioned, but let's do one example for bills receivable and bills payable. I think they have not given the example for this because this is not usually something which is asked by you guys, but let's do it. One example. So as I shown, Mr. A has sold this goods of rupees 50,000. Let's say the invoice number was 5002. Okay, so number of bills would be one. That is one bill I have received. When I have received, let's say today, that is 1st of April 2023. From whom I have received it from Mr. X. It was Mr. X or it was Mr. B. I have received it from Mr. B. So who has received? Who has received? If I have received myself, I will write my name. But if my another sales staff has received, he will write his name. Name of the drawer, that who will withdraw that money. So Mr. A will withdraw that money. Okay. Who has accepted this? So Mr. A has accepted this, or might be there could be the case the bank has accepted it. Okay. What was the date of the bill? So it was the 1st of April 2023. What is the due date? He will give me money after 2 months. So what is the due date? That is 1st of April is the selling date. 1st of June would be the due date. But always we will add 3 days extra as a grace days. 3 days extra is added as a grace day. So it would be 4th of June. What will be the due date? It would be 4th of June 2023. What is the ledger folio number? Let's say it is N. Amount of bill, that was rupees 50,000, and how it was disposed. So it is paid by Mr. B. So when I will hand over after 2 months to Mr. B on 4th of June, he will give me 50,000 and it will be disposed of in the court. That is the whole entry in the bills receivable book. In the same way, that is the bills payable book. Number of bills, date of acceptance, to whom it was given, name of drawer, name of payee, where it was payable, date of bill, due date, ledger folio, amount of bill, and how disposed of. So it is a very theoretical thing, not something which is actually maintained. But yes, if the format is given, we should know the format, and that is how we can do the entry in this. This is nothing based on accounting, but based on your real life record, which you are keeping on one table. Okay, so this is already done. General proper, you already know. Nothing. Ledger accounts, it is covered. We have prepared all the ledgers. Cash account, bank account, capital account, furniture account, etc. etc. So that is also covered. We have posted everything. That is also covered. We know our ledgers. We have some personal ledger and impersonal ledger. What is the personal? The debtor and creditor, where I write Mr. X account, Mr. Y account, or Mr. A account, Mr. B account. So that is the personal accounts, we would say. But what is the impersonal ledger? Cash book, journal ledger, nominal ledger, your sales day book, purchase day book, etc. etc. Okay. Then we have done with the trial balance, and then we have done the balance sheet, etc. So everything was covered after this till this end of the chapter. Now we have completed with your chapter fully. The chapter number 1 is closed from my end. No topic is left. If you have any doubts, just feel free to reach me out. Okay, for that. Now we are going to start the second chapter, which is your reconciliation of statements. Obviously, you would need a 5 minutes break. Okay, 1 hour is completed. But now let's take a 5 minutes break and then let's connect for the new chapter that is called the reconciliation of statements. Okay, 5 minutes starts now. Okay, guys, welcome back. 5 minutes are over. Now let's start with the topic called reconciliation statements. So before starting the topic, let us come to our notes and understand what this topic is all about. Okay, let us understand what this topic is all about. Now, going to my notes all over again. I'm creating one more notes for you. Okay. So the name of the topic is nothing but reconciliation statements. What does this topic says? Before going to that, let us understand a practical situation which is taking place in the real world. So I am Mr. A. I have received one check of how much rupees? Let's say 15,000 rupees. Okay, I have received a check of rupees 15,000 from Mr. X. Mr. X has given me the check of rupees 15,000. So whenever the cash is received, I record it into the cash book. Whenever I receive a check, on what date it is received? Let's say it is received on 31st of March 2023. It is received on 31st of March 2023. Now I will go to my bank. I will go to my bank. My bank currently, before this check has a balance of 50,000 rupees. Currently, my bank has a balance of rupees 50,000. So whenever I say bank has a balance of 50,000, if you have seen a passbook of the bank, if you have seen a passbook of the bank, they will say you have a 50,000 credit balance. They will say that you have a 50,000 of rupees credit balance. Why they say credit balance? Because that money the bank needs to give it to me. The bank will give it to me. So for bank it is a credit. For us it is a debit. For us it is a debit. So this is an asset for me. Okay. This is an asset for me. Why it is a debit? Why it is an asset? Because it is credit for bank. This is credit for bank. That means debit for us. And whenever it is a debit for us, it will be an asset. Okay. So I have a debit balance of rupees 50,000 in my bank account. Now what happens? I have gone to the bank and deposited this check. Will my check be cleared on the same day? The answer is no. The bank will clear the check after 3 to 4 working days or 2 to 3 working days, whichever they take. It is not always cleared on the first day itself, on the day of deposit of check. It will not be cleared on that date. But in my books of accounts, what journal entry I have already passed on 31st of December, what I have done? I have done bank account debited with rupees 50,000 to Mr. X account 15,000. So after this journal entry, if I see my bank account, there was balance 50,000. Now, because of this transaction, particular to this transaction, my bank balance will increase to Mr. X account because we have received this money 15,000. So what will be the total on the debit side? It will be 65,000. So what amount will go to my balance sheet? the balance carried down. It would be 65,000. So my books of accounts will say that I need to take 65,000 from the bank. But what my bank statement is saying, that they just need to pay me 50,000 rupees only. Do you think there is a gap between these two? Why there is this gap? The reason of this gap is the check which is not cleared yet. So I've deposited a check which is not cleared yet. This will result my books of accounts balance to be higher and bank balance to be lower. So I have to reconcile this. I need to prepare a reconciliation statement. I have to prepare a reconciliation statement which will enable the matching of the two balances as per the bank and as per the cash book. That will enable the matching of the balance as per the bank and as per the cash book. That is the reconciliation statement is all about. So if I go in a statement, I will write balance as per cash book. What is the balance as per cash book? Cash book means our books of accounts. You have seen the cash book, that is the triple column cash book. So our triple column cash book is saying that we have a bank balance of 65,000 rupees. But balance as per passbook is showing a balance of 50,000 rupees only. 50,000 rupees only. So how will these two match? I will pass a reconciliation statement. I will prepare a reconciliation between my cash book and my bank passbook. Okay, so cash book is saying a balance of 65,000 and they have given one information that check deposited but not cleared. Check deposited but not cleared of rupees 15,000. That is the information they have given. So what I will do, I will deduct check deposited but not cleared rupees 15,000 from my cash book balance and I will reach out to my balance as per passbook. That is the balance as per the bank. Am I clear, everyone? So this is a very simple technique, but it is not as simple as it looks. It will be a little bit difficult. Okay, so before learning to the actual results of this, you need to understand the purpose. So this is one check. There can be 1, 2, 3, 4, 5 check which are outstanding at the year end. Now you have to reconcile the balances. So you have to see which check is cleared and which check is not cleared. Whichever is not cleared, it will come into your reconciliation statement. It will come into your reconciliation statement and your cash book and passbook will be reconciled. But if you do not prepare this reconciliation, your bank will say you have a balance of 50,000. Your books of accounts will say you have a balance of 65,000 in your bank. This is not matching and this is not fair presentation. It is not a fair presentation. So that is why we need to prepare a reconciliation statement to match the two amounts or to identify what is the difference between these two, which is causing the balance to be different. Okay, that is what all the reconciliation is all about. So coming back to your notes. So reconciliation statements. The first part is the bank reconciliation. First part is the bank reconciliation. We have studied the cash book, which has two columns, the cash account and bank account. And there was one more column, that is the discount account. The majority of the transactions which get settled through the cash or bank for cash received or paid, the effect the cash box is instant, because whenever you receive the cash, you have the cash in front of you. You can verify that cash. But whenever it is in the bank, you need to check the bank statement for that. The transaction settled through the medium of bank, that is by way of check, order, draft, etc. Takes a little longer time. If customer pays by check, it is deposited in the bank, who will send it for clearance, and then only it will be credited by the bank into the account of business entity. This may take about a week. 3-4 days is a normal period of time, but it may take a week also. Similarly, when a check is issued to the supplier, he will deposit in his bank, which will in turn will clear it. Because of such time log, there would be difference in the records, and we need to reconcile that difference. Okay, so when we receive any check, what is the journal entry we do generally? That is the bank account debit to the customer account, which we did right now. But for the bank, this amount is collected through the clearing system and payable to the business entity. The entry in their books, in the book business, or sorry, in the bank's book, what the journal entry would be there? It would be clearing account debit to the business entity to whom it is paid. For example, it was paid to Mr. A. So clearing account debit to Mr. A. And when this will be paid to Mr. A, it will be reflecting in the Mr. A's bank account statement. So now what we need to prepare in the reconciliation. So this is the format. I'm going to illustration 1 directly. See the format what they have used. We are just looking at the format, not the transactions. Bank reconciliation statement for Mr. P. Roy as on 31st of December 2020. That is one format they have given. They have started with the balance as per cash book, which is 75,000, and they have gone till the balance as per passbook. This is the balance as per passbook. Okay. Now let us do the transactions one by one. Okay. Before doing the transactions, let us understand the concepts. See, my dear, we have two methods of solving the BRS. Method number 1 and method number 2. Method number 1 says go from balance as per cash book to balance as per passbook, because any one could be the starting point. Usually the method 1 is preferable. But if they ask you start from balance as per passbook and go till balance as per cash book, the transaction effect will be different in both the cases. How the transaction effect will be different in both the cases? Just see what we have done in the earlier reconciliation. The balance as per cash book was 65,000. Balance as per passbook was 50,000. So I have deducted 15,000 from the 65,000 because of check deposited but not cleared. Check deposited but not cleared. I have deducted that. But if the reconciliation was other way around, that means balance as per passbook 65,000. Sorry, passbook balance was 50,000, not 65. Balance as per passbook was 50,000. Balance as per cash book was 65,000. Now I have to prepare this reconciliation statement. Now see, this hand is my bank. This hand is my cash. So my bank balance is at 50,000 on this hand. My cash balance is higher. My cash balance is higher. That is 65,000. 65,000. But I need to go from bank to my cash account. So what I need to do? I need to add this 15,000. What I need to do? I need to add this 15,000. I'm going from 50 to 65. I'm going from 50 to 65. So I need to increase this. So I will add check deposited but not cleared. Check deposited but not cleared. How much it is for? 15,000. And my bank reconciliation as per cash book would be matching. You need to think from where you are starting and from where to where you need to go. Okay, that is the trick you need to play with your hands. First, you use your hands, then you will understand that without help of hands, you can also do this reconciliation by doing it mentally. It is always logical to go from one place to another rather than just learning the things which is given in your notes. So if you can see, they have given you a big reconciliation summary that when to add, when to less. I say this all is of no use when you have your concept in your mind. If you do not have your concept in your mind, you have to learn this thing. You have to learn this table, and it is very difficult. Not something which I can suggest. How you can do? Think logically, because the person who has created this table, he has also thought it logically. And that is how you can clear your concepts. So maza aayega. It will be a lot of fun, but you need to have the patience, you need to have the understanding, you also need to have full attention. Okay, can I expect the same from you guys? Come on, everyone. Can I expect the same? We will do some transactions, it will be a lot of fun, but let us just focus right now on how to do this rather than just doing it by learning it. Let's do it logically. Okay, now I have given you one transaction. Now let's do the other transaction. Balance as per cash book is rupees 20,000. Balance as per cash book is rupees 20,000. They've given you first transaction. Check deposited, but not cleared. Sorry, check deposited, but not cleared. Let's say rupees 5,000. Second, bank charges rupees 1,000. Bank charges rupees 1,000. Balance as per passbook is not given. You have to find out. You have to find out the balance as per passbook. Now let's do it and let's do it logically. So what is the starting point? So they have given balance as per cash book rupees 20,000. Let's do it from the equal. My bank is at 20,000. My cash is also at 20,000. But now what has happened? There is a check deposited, but it is not cleared. That means my bank account will be below by 5,000. Because in my books of accounts, if the balance is at 20,000, the bank has some check which is not cleared. So my bank balance would be lower. What I need to do in this case In this case, I have to reduce the cash balance by 5,000. I have to reduce the cash balance by 5,000. So I will write over here less check deposited but not cleared. So it would be 5,000 minus. It would be 5,000 minus. So one answer I have received right now, that is incorrect. 19,000 he has given. That is incorrect, beta. Okay, because the 5,000 rupees will be deducted, which is for check deposited but not cleared. Now let's go to the second one. There is a bank charges of rupees 1,000. There is a bank charges of 1,000 rupees. So bank charges can be seen in the bank account. Yes, we can see the bank charges by the bank account, by bank statement. But in my cash book, the balance would be higher. So let's say, for example, my balance is that 20,000 matching in both the books. But if the bank has imposed some charges, my bank balance will go down by 1,000. So if I have to match, I have to go to the passbook. I have to reduce my cash book also by 1,000 rupees. So it will also be reduced over here. So I will deduct the bank charges of rupees 1,000. So currently in my bank account, the balance would be rupees 14,000. That should be the balance as per passbook. It should be the balance as per passbook. Okay, now let's do it reverse. The same transactions, but I will go from passbook to the cash book. Just reverse of it. You have been given balance as per passbook is rupees 14,000. First information, check deposited but not cleared rupees 5,000. Bank charges rupees 1,000. You have to find the balance as per cash book. You have to find the balance as per cash book. So now let's start the reconciliation statement. So balance as per passbook is rupees 40,000. What I have to do, I have to find the balance as per cash book. This is the reconciliation statement. So passbook is my starting point, and I have to go from passbook to my cash book. This is my cash book. So currently my passbook and cash book both are matching right now. Both are matching. Let's say now they have given the check is deposited. Check is deposited but not clear. My cash book will be higher because check is deposited. In my books of accounts, I will do the entry, the bank account debit to customer account, but my passbook is lower. So I have to go from passbook to the cash book. I need to add the balance. I need to add the balance. So I will add check deposited but not cleared rupees 5,000. Rupees 5,000. Now the second entry, the bank charges rupees 1,000. So earlier both were matching. Now my bank charges has been imposed. So my bank balance has gone down. My bank balance has gone down by 1,000 rupees. My cash balance is still higher. So I have to match this. I have to add this charges. I have to add this charges to go to my cash book balance. So bank charges rupees 1,000. So what should be the balance as per cash book? It is 14 plus 5, 19 plus 1. That is 20,000. So in the previous example, both the things were deducted because we were going from cash book to the bank book. But in the next example, we are going from the bank book to the cash book. So both the things were added. That is how the logic works. Am I clear, everyone? This is the reconciliation we are talking about. This is the BRS, bank reconciliation statement. Sir, is this topic important? Important name. It is very, very important because in every multinational organization, the bank reconciliation, this is also called the bank reco. Okay, reconciliation in short is called bank reco. So bank reco is always done so that your balances are matched, or I would say the balance are reconciled with books and bank statement. So this is the motive behind it. And if it is not reconciled, you have to know the reasons behind the differences. You have to know the reasons behind the differences. Okay, crystal clear, sir. Perfect, beta. Now we will have a little fun doing the examples which are in your notes. Okay, I will not teach you this. This is something which a rectification can be done. This can be learned, but I do not recommend it this learning because you can think it logically. Okay, let's go to your reconciliation statement. Let's go to illustration number 1. On 31st of December 2020, P. Roy bank balance as per the cash book. So when they write the bank balance as per cash book, that means your books of accounts balance. That is how much? 75,000. What is the balance as per your cash book? That is 75,000. On receipt of the bank statement, they have now received the bank statement and they have found that what they have found 3 checks, 3,000, 4,000, 1,500 drawn in favor of suppliers respectively. I have given this check to supplier, that is 3,000, 4,000 and 1,500 on 20th, 29th and 30th December. Had been debited in the statement on 2nd January. It is debited on the statement on 2nd January, not today. So my bank balance is higher. My cash book balance is lower. So I have to reach the bank balance. I have to increase it by 3,000, 4,000 and 1,500. So if their starting point is cash book, so they will add the 3,000, 4,000 and 1,500 to this reconciliation statement. So if you thought it logically, you have already got the answer. That is 8,500 plus, and the description would be check issued but not presented for payment. Okay. Now next. The bank had credited rupees 8,000. I have not credited. The bank has credited. What? 8,000 rupees on 30th of December in respect of collection made by bank directly from a customer. So I had one customer who has directly deposited some money into my account. Till now, I didn't knew that, but that person has directly deposited. How I have known now, because I have printed my bank statement and I can see that there is 8,000 rupees which is credited to my bank account. Why it is credited? Because a customer has paid me the money for the goods sold and they have not intimated me yet. They have not intimated me yet. So 8,000 is received in my bank account. My bank balance would be higher. I am going from cash book to the bank book. I have to increase my balance by 8,000. So that would be added. So see your second collection by bank from a customer not recorded in the cash book 8,000. That is now added. Okay, that was your second transaction. It is the logic who runs over the theoretical knowledge. So if you know the logic, you need to learn the theory. Simple theory can be learned because those are something which can be asked for 1 or 2 marks questions. But if I say you that learn when you're going from cash book to passbook, you have to add these all things, deduct these all things. That is not logical at all. Logical is you apply your concepts and then think from where to where you are going. If you are going from point A to point B, so you have to see the distance between those points. But if I say you have to go to from point A to point B, before that, before reaching point B, you have to go to point C as well. Now you have to see the distance A to C and then C to B. Okay, Google Maps is able to do that for us. But obviously here Google Maps is not going to help. You have to help yourself, right? So now you have another transactions which says two checks of rupees 5,000 and 6,000 were deposited into bank on 30th of December. So I've deposited two checks of 5,000 and 6,000 into the bank on 30th of December and had been credited in the bank statement of 4th of January. So when I'm preparing this statement, a reconciliation, I am preparing it on 31st of December. So this will be credited later on. Till now it has not been credited. What is the status? My cash book is higher because I have debited my cash book in my books. I have debited the bank in my books. So if I have to go from cash book to my bank, I have to reduce this by 5,000 and 6,000. So 11,000 will be deducted. That is check deposited but not credited in the passbook up till 31st of December 2012. And the last transaction, the bank had debited rupees 30 as incidental charges on 30th of December, but not entered in the cash book. So my bank balance is lower. My cash balance is higher because bank has imposed some charges. So balance will go down. So what I have to do, I have to take my cash book also down by 30 rupees. So bank charges not recorded in the cash balance as per the passbook, rupees 30. So 11,030 rupees will be deducted. This will be added. Okay, so 75,000 plus 16,500 minus 11,030 rupees will give you the total balance of 80,470. Here they have done a subtotal that is not required as of now. Okay, you can ignore this, just cut it off. So 75,000 plus 16,500 minus 11,030. So it will give you a balance as per passbook of rupees 80,470. One student is saying, sir, it is so easy. Yes, beta, it is very easy if you understand the concept, and if you don't understand now, this will be the most difficult thing for that person. I have taken many interviews of the students for some suitable positions, and they are not able to perform the bank reconciliations. That is the most difficult thing for them. Why it is difficult? Because their logical aptitude is not working well. They have learned the theory, but they have not learned the logical aspect. So I do not teach you theory. I'm going to teach you the logical aspect so that theory you can automatically develop by yourself, right? Okay. But the secret fact, I have told you the theory also in the introduction, which we have covered earlier. So that was the theoretical part of this. So that was your question number 1. Illustration number 1. Once again, I will go back to that page. So for those students who have not got this, let's do it once again. Let's do it once again. Balance as per cash book. What is given? Now let's go to my question. I will rub all of this again and let's solve this one more time. Okay, because I want this to be crystal clear. Okay, one more time we are going through. Mr. P. Roy's bank balance as shown in the cash book was 75,000. So balance as per cash book is rupees 75,000. I have to find the balance as per passbook. Currently, I do not know what is the balance as per passbook, that I have to find out. How I will find out? Let's see. There are 3 check, 3,000, 4,000 and 1,500 drawn. Drawn means I have written that check. in favor of suppliers. That means I've given it to the creditors. So when I will give this, what journal entry I will pass? I will debit the creditor account and I will credit the bank account. So in my books of accounts, I will reduce my I will reduce my bank balance. But those creditors has not deposited that check right now. They have not deposited the check right now. So my bank balance is still higher. The cash balance is lower. When they will deposit, it will match. It will match obviously, but they have not deposited. So my bank balance is higher. So I am currently at the cash book. I need to go to the passbook. I have to increase this to match this. So how much I will increase? 3,000 plus 4,000 plus 1,500. So I will add check issued because I have given this check. So that is called as check issued, but not presented. Presented means they have not been given into the bank for payment. How much the amount was? 3,000, 4,000 and 1,500. It would be rupees 8,500 and this will be added. Why this will be added? Because my bank balance is higher, cash book balance is lower. I have to increase this. Why we have to increase this? Because it is not posted into the bank yet. Whenever it will be posted, it will be deducted. Now, second point. The bank had credited 8,000 on 30th of December in respect of collection made by bank directly from a customer. So earlier both balances were matching, but one of my customer has deposited 8,000. So my bank balance is now higher. I have to match this. I will add this. So I will add check directly deposited in bank by customer rupees 8,000. So this will be added because my bank balance is higher. I have to reach it. I will increase my balance. Next, two check of 5,000 and 6,000 were deposited into bank on 30th of December. So two check has been deposited. That means my cash balance is higher, but it is not credited in the bank. So my bank balance is lower. I have to match this. I have to deduct this. I have to minus this. So it would be 5,000 and 6,000 less check deposited but not cleared because it is not cleared in the my bank. That would be 5,000 plus 6,000. That would be 11,000 minus. That's why I'm writing it in bracket. Then again, bank had debited rupees 30. So my bank balance is lower by 30 rupees. My cash balance is still higher. I need to match this. I have to bring my balance down. Less again. Bank charges rupees 30. So this will reduce my balance. Okay, so bank balance is down. I have to match this. So this will be reduced by 30. And now if you do the total, it would be the same, which is coming over here. It is 87,040. It is, sorry, 80,470. That is the balance as per passbook. Okay. And that is called the reconciliation statement. Which reconciliation statement? It is the bank reconciliation statement. Am I clear, everyone? This is how we will do this. The BRS, which we are talking about. Okay, now I will give you something in your homework. So this illustration 2, that is on page 156. This is your homework. Try to solve this. This would be an easy one. As well as try to solve illustration number 3. That is also will be your homework. If there are any doubts, then we can take it up. But if not, you can solve this by your own. Now, I will ask you, we will do it together. We will do one more question together. That is called the illustration number 4. When there is an overdraft balance in the bank. When there is overdraft balance, that means there is a negative balance in the bank. That means I have overdrawn the money. I had a balance of 1000, but I have withdrawn 5000. Sir, how is it possible? Because bank give you certain overdrawn power. That is the drawing facility, extra drawing facility than your normal balance. So your 1000 is your balance currently, but you have drawn 5000. So now your bank balance is minus 4000. So I will say my bank balance is overdrawn by rupees 4000. Nothing new to be done, but your sign would change. Instead of positive, you will write it as negative. See, the bank passbook of Mr. Anil showed an overdraft of rupees 6000. So I will start my bank reconciliation statement. Balance as per passbook minus 6000. I will write it as minus 6000. Okay. Then what details we have? From now, from passbook, I have to go to my cash book. So see, some things will change over here. If you do not look at the solution right now, because that might confuse you, because it is an overdraft balance. Let's do it logically. First, check issued but not presented up to 31st of December 5500. So this is my passbook. This is my passbook and this is my cash book. I have issued some check. That means my bank balance has gone down lower, but it is not presented. So I have to increase this balance by how much amount? By 5500. I have to increase it by 5500. So I will add check issued but not presented. So it is 5500. Let's go to the second example. Check deposited but not credited up to 31st of December 2020, 9000. So if I have deposited the check, my passbook balance would be higher. Yes, or my cash book balance would be higher. Sir, my cash book balance would be higher. If I have deposited the cash, my cash book balance would be higher. If I have to go from passbook to the cash book, I have to increase the balance. I have to increase the balance. So check deposited but not yet credited. That is rupees 9000. So I will add check deposited but not cleared, I would say. Once again, let us do the first case once again. Okay, there is a little confusion in this. We are going from passbook to cash book. We are going from passbook to cash book. So first thing is very clear. Okay, so just to clarify your doubts, first example says that check issued but not presented. That is check issued. I have given the check, but it is not presented. So my cash book is lower. Cash book is lower by how much amount? It is lower by 5500. My passbook is still on a higher side. My passbook is still on a higher side because the check is not cleared. So I have to reduce this. I have to reduce this by 5500 because if we are going from passbook to cash book, this will be deducted. So in the first example, this would be deducted minus check issued but not presented. That would be 5500 minus because it is not cleared into the bank. In the second case, In the second case, there is check deposited. Check deposited, that means my cash book says the balance is higher, but it is not yet credited. It is not yet credited. So I have to go from passbook to the cash book. So I have to increase the balance by 9,000. So I will add here plus 9,000. Okay, that was your second part. Going to the third part. Bank commission rupees 30 was entered only in the passbook. So if you see this, the bank balance is lower by rupees 30. My cash book balance is still higher. So I need to add this back to reach to my cash book balance. So add bank charges rupees 30. Now last, a check of rupees 6,500 issued in settlement of a debt. Okay, I issued one check of rupees 6,000, was encashed on 20th of December 2020, but entered in the cash book as rupees 8,500. So there is a mistake. There was a check of 6,500 which was issued, but in my cash book, I have mentioned it as 8,500. So I can say that my cash book balance is lower by extra 2,000. Yes. So if I have to consider this, I have to reduce my passbook also by 2,000. We have to reduce my passbook also by 2,000. Okay. Less. What was the statement? Amount incorrectly entered in cash book. That is minus 2,000. That would be minus 2,000. Now let's do the total and find out what is the total coming over here. Okay, whether it is fine or not. So 6,000 minus 5,500, that's minus 6 minus 5.5 plus 9,000 plus 30 and minus 2,000. So balance as per cash book should be 4,470 overdrawn. 4,470 overdrawn. So you can see in this example also the overdraft balance is 4,470. So if you think everything logically, your answer would be correct. Your answer would be correct. Here, what extra precaution you need to take? You have to consider the minus sign very, 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 very carefully. Because if you mess up with this minus sign, your reconciliation would fail. You need to make sure how you are dealing with in your mind, and then you can apply the concepts. Because everything is based on this addition and subtraction. If you do this addition and subtraction incorrectly, everything is ruined. No sense of bank reconciliation at all. So whether there is a positive balance or there is a negative balance, just write the balance as it is. But if in your book you can see that they have not written as it is, they have written overdrawn balance of 6,000, and here they have also written the overdrawn balance by 4,470. That is a separate method of writing it. They are going by the theoretical aspect of it. So if you see what we have added 9,000 and we have added 30. Now see what they have done. They have deducted 9,000 and deducted 30, because earlier they have mentioned the balance as positive, but they have written a word on the left that is overdrawn. Okay, they have mentioned overdrawn and they have written it as positive. That is why they are deducting these two. And what we have added, sorry, what we have deducted 5,500 and we have deducted 2,000. So see, they have added 5,500 and 2,000. So what is the reason behind that? Because they are reversing the signs. They are reversing the signs. They have considered this positive. They have considered this positive. Why this they have considered this positive? Because they have already mentioned on the left that is overdraft balance as per cash book and overdraft balance as per passbook. So all the things were reversed. But what we have done, we have considered the balance as per passbook and we have considered the balance as per cash book. That can be positive, that can be negative. So we have considered the negative balance and then we have applied our concepts. Both the things are correct until unless you get the correct answer. So from here also you can see we are starting with 6,000 and you are going to 4,470, and here also we are starting with 6,000 and going till 4,470, and it is an overdraft balance. Here also it is negative, that means it is an overdraft. So if you like the presentation better in the book, so just do reverse of everything which is being logically done. Okay, so now you can match the presentation of your book. What I've said, if the balances are negative, just do reverse of what we do the logically, and then you can match the presentation which is in the book to match the presentation in the book. But if you don't want to match the presentation in the book but do it logically as we were doing earlier, just follow the signs correctly. If it is a negative balance, enter the minus over there. If it is a positive balance, write it positive. That's all which I need to explain you in the chapter bank reconciliation statement. So in 1 hour, I have completed this chapter as well. But obviously, no, this is not completed until and unless there is two more parts to it. That is accounts payable reconciliation and accounts receivable reconciliation. Only thing you need to do now, you have to practice this BRS. There are many illustrations which you can practice it right now. Okay. And there are many transactions which you can see. Then we have to cover another topic which is called amendment in the cash book. When there are some changes in the cash book, there are some mistakes in the cash book that we have to do cash book columns. That is similar to your cash book. Okay. Thanks a lot, dear. Thanks a lot, Nitish. That comments really encourages us. Thanks a lot. So all you need to do, you have to practice some of the questions over here, and this will be all done from your end. We have to prepare some reconciliation statement, as I said, for other statement for other types, that is the account receivable and the accounts payable. That is the easiest part again, which we are going to cover later on. That is called the payable reconciliation and the receivable reconciliation, which we will cover in the upcoming chapter, and this chapter would be done. So I think one more day for this chapter and it is covered. Okay, so that's it from my side today. Thank you all. Thank you. Bye. Take care.